This is Taking Stock on Bloomberg. I'm Pim Fox. With crude still gushing in the Gulf of Mexico, we've been hearing a lot about oil explorers and drillers lately. A story we've heard less about is how important the tankers can be to the economy. We're talking now to the head of the world's largest owner and operator of medium-sized crude oil tankers, Bjorn Moller, Chief Executive of Teekay Corporation. Welcome to Bloomberg, Bjorn.
Thank you.
Talk a little bit about the tanker market right now. How are rates? Are they stabilized or are they increasing?
Rates are significantly stronger this year than we saw second half of 2009. In fact, they're quite a bit stronger than we would have expected. I think it's fair to describe 2010 as the year of the return of oil demand growth. So we're seeing significant growth in transportation demand, both from greater consumption and longer distances. Oil is traveling on longer distances. Today, the marginal barrel is being produced in Angola or Brazil. It's being consumed in Asia. So you need more ships than to hold the same amount of oil than before.
What about floating storage? We often hear about the use of tankers in order to store oil because many investors think that oil is going to be worth a lot more in the future.
That's right. Floating storage has become an increasing factor. It moves around depending on the forward price curve. But as oil traders become more involved in the oil business, you're going to see more storage. So tankers are not only used for transportation, but as you say, can sometimes be absorbed in the storage business.
Talk a little bit about the strategy at Teekay Corp, because I know that you've made some acquisitions. You've moved into the floating storage, offloading, and production facilities, particularly in the North Sea. What's happening?
Floating production is a growth area. We expect 10% year-on-year growth for the next 5 years, and there's no spare capacity. It's really I guess it's 5 years down the track from the exploration drilling that's going on around the world. And floating production is an area that's very specialized. I think when we acquired a business platform 4 years ago, the market was waiting for us to roll these contracts over at more profitable levels, and we've been doing that. In March, we announced a rollover that's going to add $5 to the price of Teekay shares. And just this week, we announced a 9-year extension in Brazil on another floating production platform. So we're seeing a lot of momentum there.
Now, these floating production platforms, I mean, technically they are almost ships that are moored permanently where the oil is being drilled.
That's correct, and it's in a way a floating process plant, and it's very highly regulated, particularly in the North Sea, where we're the leader. It's harsh weather, it's highly regulated. So we have the leading franchise in that niche market.
Now, just talk a little bit about the strategy of the company. You've got a parent company, Teekay Corp, but then you've got these daughter companies. What's the relationship?
The business model at Teekay is that we have the daughter companies focused on different businesses, so Teekay LNG Partners, Teekay Offshore Partners, and Teekay Tankers. The parent company sells assets to the daughter companies, and in return for capital, that capital is then recycled into new projects. So Teekay Corporation at the parent company level is in a way a project developer and a project manager. So that's our strategy.
And is the strategy also to continue to pay dividends to the investors?
Yes, that is the strategy. The daughter companies are all dividend plays. The parent company is also, however, paying a very good yield. It's around 4 to 5% yield at Teekay Corporation right now.
Have you seen increased imports of oil and oil products into the United States? Is that changing?
The U.S. had a declining oil demand in the last couple of years. This year we're seeing return to oil demand growth in the U.S. So obviously if the production gets deferred in the U.S. due to a drilling moratorium, the oil will have to be brought in from afar.
And what about single hull versus double hull? Are we just seeing that transition almost complete to double hull tankers?
It is towards the end of the phase out of single hull. But I think the oil spill in the Gulf of Mexico will only accelerate the final phase out. There's still over 10% of the world tanker fleet that's single hull. And with rates being already pretty volatile, I think the force out of those ships will be maybe a catalyst for stronger rates in 2010.
I want to thank you very much, Bjorn Moller, coming to us as the Chief Executive of Teekay Corp. Thanks for the insight into the world's tanker business.